Hello, this is Vance, and this is Wednesday, September 23rd, 2015. These are the CL trades for today using the slow hand method for price action. A couple things, pretty straightforward today, but a couple things I wanted to really talk about more than anything else, I guess, is about time. It's about the DOE report, how that can affect prices. I've talked about this in the past, and we had kind of an issue that really came up today. I've said in the past that really when you approach the let's say the DOE report comes out on midweek if there's a holiday on the Wednesday at 10:30 a.m. Eastern Standard Time. So anywhere from about 9:45 to 10:30, prices sometimes will go, especially on the CL, will go into a sideways, really get a tight trading range in anticipation of what the release is going to be. Not all the time, but it does happen quite often. So taking any trades at that time is really suspect prior to that, or like after 9:45, 10 o'clock. And as you get closer to the hour, things start stacking up. If there's a definite move, even if it's a good setup, it's really worthwhile to wait for the release to come out, because as soon as it comes out, there typically is going to be some type of dramatic movement one way or the other, and sometimes it'll fake out. It might go down and then come up, and it might go up and then come down very rapidly, depending on what buyers or sellers are really thinking just prior to when the release of the number is, or the report. So that's something to keep in mind. When to start trading again? Well, anywhere from half hour, 45 minutes, maybe an hour later, depending how prices settle out. And I'm not saying that I have not traded right after, a few minutes after it's open, or after the release has come out. I have, but it doesn't happen very often because movements are typically very rapid, and I'll talk a little bit more about that. So it's probably best just to stay out of it, that more than anything else. I'm not saying always, but in most cases to stay out of it. It's hard enough without trading is hard enough without having to really kind of think about news and how it's driving the market. Just one more thing to think about. But that's not to say that there's some pretty decent opportunities. And that one tenet that Mac uses that talks about is that when news items do come out, markets will respond in a way that they do when there's no news items. It's just that it does it much faster. But prices will typically retrace. The price action will respond in virtually the same way, except that it's highlighted or sped up. And that's something to really keep in mind as well. But what we're looking for is we're trying to look for clues or tendencies for price to change in the short to longer term. And I mean longer term without the day, maybe the next couple of days, but certainly from this point, from the point that we're looking at forward. One of the things to really keep in mind is that how prices are leading in, the price action leading up to a particular moment when you're putting on a trade is going to influence you what direction you're going to take that trade. Now, overnight price, like the opening, this has already changed already, but when price opened overnight, it opened really at around 46.57, somewhere in that neighborhood. Let's give it up like somewhere 46.63, and then traded down to 46.12. So it's a pretty narrow range. You see price move back up, fell off again, and then right near the open, and this is right at just after 9 o'clock, we had this pullback down to this area. This is from roughly 7:30 to 9 o'clock. We had from this double top, triple top, quadruple top. As you see, price really was ranging up near and around the 46, almost the $47 mark. You almost touched $47 with $46.93. Pulled back from here, and then price kind of made its way down to this area, which is roughly around 46.30, and then price moved up. Now, this is really the first trade that I saw. We broke this channel. It really tested. It was like a first attempt to go down. It failed. Attempt to go down the second time down to here. So it's really kind of like a second too long, a very strong bar. Your stop would have been below the signal. Here's a signal bar, or the entry bar. See right to here. If you were to get in, you might get it. You might have even gotten in lower, limited in, particularly if prices came up here. As long as you had your 15 tick stop, where this box is, Yeah, I had this in here. I didn't really have it in there, like, so, because you don't know, it hasn't retested this area, so you're really not sure. So, but at the same time, it did break this channel. It did move around. We're a ways away from the EMA, and I think this is an energetic move. Whether it's going to continue to go down, I don't know. You don't really know that one way or the other. But even if you put a straight line across here, it's almost like there's a supported area here. And so this is close enough to a supported area, and because you can see this capitulation price going on. You don't know it's going to go up. I might have marked it in green, but I liked it because it was a pretty strong bar out of here. So I think that was in. We've got double tops at the other side of this channel. So I thought it was a reasonable trade to take. Breakout pullback right here. Again, this is another indication that we're probably moving higher. And again, if you even got in at this one, you can see that. I should mark that as a channel. I put the channel in here. Ready from about here up in this direction, and copy that right to here. So once price gets up to this area, you see this first entry. It tries to go higher. First failure, second failure. Second entry short right to here. On this bar right here, it's already broken. This is a fairly, I wouldn't say extremely bearish, but if you look at where the tops of these, is it close enough to test? If you move it across here, well, maybe a little bit higher. So I don't know about any trade, but this is what I'm talking about. When we're getting, this is at 9:30, we're getting 9:45, and you can see where price starts to capitulate. And remember, it's 10:30, like I said, anywhere from 45 minutes, half an hour before, price is not moving up. This right here, I marked this in purple. This on a regular day, like not a day, would have been a pretty decent trade. And so if you say that this is maybe the channel right here, this channel down, we've already had a pullback. Let me just move this out of the way so you can see it a little more clearly. Price comes down. This is the high here. First entry, pull back. This is kind of the second entry down to here. This is capitulation. Second entry down to here. Then it goes into this overlap. Price maybe not go down a little further. We've already got support from up here. We've got this channel, so it wouldn't be a bad trade to take given this circumstance. But again, it's really close to the. You don't know what's going to happen at this point. If you limit it in, it would have been all right. You would have made your ticks. You see how it got to it tried to test this area, didn't quite make it. Now we're at the we're quarter after 10 is here, and then when the market when the announcement is made, the DOE report comes up. This is right at 10:30, and look at these bars, 10:30. So we're like at 10:27. Here's 10:30 right here on this bearish bar. We have this move up here, and so 10:30. This is 10:31. So these bars, 1, 2, 3, 4, 5 bars painted in a minute. See how that came in? And then price, even though you had this first pullback, second pullback, price is moving up higher toward here, and fails at the other side of this channel. Now, again, we're looking at the fact that this is really, pricing is coming on really rapidly, even on the 800 tick chart. Can't imagine what it would be on a smaller time frame. It must be like going crazy. So you look at pricing from here, and even though these are really decent setups, even down here on a without the report, if you could limit in down here, because even if you look at it from where the support is from the other side of the chart, look from here, is that close enough? As far as support is concerned, could be. Anyway, price moves up here. This is closer to we're talking about quarter to 11, and when price gets to when the price of oil gets to the level of 47.13, just above the $47 mark, you can see there's some capitulation. Pulls back the first time, pulls back the second time. There's a second entry short right here. Price moves back down here. You get this double bottom, pulls back. Well, this is a single bottom actually. Double bottom here, blows down where there's this turnaround, moves back up here, and then fails again. Tries to move up here and then fails again. So let's take a look at this. Now, just so you can just highlight this area for a moment. Maybe I can kind of give you some insight or things that I'm thinking about when I'm looking at these trades at these areas here like this. So if you just take a look at this area, let's take a look what happens. We have this channel up here, which was tested down here a couple of times, even though this is kind of the high point. This is the highlight. This is, of course, this is the high of the day. Going long at the absolute high of the day is a kind of a challenging trade to take, because it could go higher. But I mean, look at what happened when it got to the high of the day. Moved up, pulled back, moved up, pulled back, moved up again. Now, does it pull back? Do you take that trade on a short? I don't know if that you do that. That certainly, it certainly would have worked out had you done that. But let's take a look at a couple areas. If you get in on a trade like this, look at this. Price moved up and it's pushing back down. Price moves up and it's pushing back down. Look at these long spikes on this side. When you look at these prices, even on the single bar, it can't stay up here. And even on these ones right here, it can't stay up here. So now, even though we're at the bottom of this channel, and now that we've double bottomed out here, here's the first bottom, second bottom, and prices bouncing around here, this is a good place to go short. It's a second entry short off this green bar, but look at the resistance that we have here. These spikes up, I mean, it's not a lot of ticks, but you can see that when you add this all up, and if you look at it from the perspective of price cannot stay up here. It went up here, it pulls back, goes up here, pulls back again, and then these long bars, it's making an attempt to go up, but it just can't stay up there. So if anything, you have to look at, maybe we'll be testing to this other side of this channel, or maybe down to where this support is on these two areas. And let's see what happened. You can see that when it got to this level, there was some hesitation, but look at these gaps. Price really dropped out of bed. Now, this is the other side of it. When the momentum picked up, it really started to drop. I mean, when pricing, this is where we have a real and emotional move. This emotional move, once price kind of turned around this area, and this is a pretty decent to go short right here, because I think that we may have a measured move. And this paints very quickly, though. We have first pullback, second pullback, and then immediate failure. So I think we have a measure. We got room to get out, from this chart, from the bottom of this down to this bottom here. And had you gotten this trade, look what happened. It just kind of falls away. Now, it does make an attempt to pull back. Are there other ways to get in? Well, we have a first pullback. Here's a pullback here. First pullback, second pullback, and it fails again. And then we have a gap here. Pulls down this area, so we have another attempt to come back to the EMA, and then it fails again. We can see these little moves here, fails again. First pullback, second pullback fails, then tries to pull back, and then fails again. So here it broke through and it failed. So you can see all the way down here, price is failing. But there really isn't, I mean, unless you're really aggressive, prices, it's pretty tough to get on these trades on this downside. I'm not saying there isn't any trades, but you can see the separation between the EMA and where price continues to fall down. You see that the EMA is really trolling, because this is really going down very strongly. And from here, this is roughly 11 o'clock to down here. This is just, here's 12 o'clock. It's right about, let's see, 12 o'clock is right 12:07. So this is 12 o'clock right here. This movement from 11 o'clock, which was dropped at, let's call it $47, down to here, 45.17, 47 to 45, $2. This took about an hour. And so this was really painting very quickly down this area. Almost like any reason to get in, any reason to get in short. Is this enough? These two, is this a reason to get in here? First pullback, second pullback, drop one, sell right here. Pull back to this area, pulls back again, another reason to get in, or is this enough? I mean, even if you looked at it, even if you shorted right on this bar here, this little miniature little doji here, let me just get and you use your 15 tick stop box here. See 15 ticks, 49 to 34 right here. Even on this bar right here, your 15 ticks would be here is enough room to hang with this trade, especially when it went down to here. Now, you get on this trade, it drops down this area. You would have gotten your first two contracts off, almost. If it pulls back and you get nervous, you can always scratch it, and then when this sets up again to get back in, I mean, there's nothing saying that you have to stay with the trade once you put it on. I mean, that's only prudent, especially when it's moving pretty rapidly. So there's a couple of reasons to get in here, but look at how you don't know it's going to drop this far, but it continues to drop. And now once you get in on one of these, whatever the reason, man, you've got it made for this day. Even on this trade, this is a pretty strong bar. We have this rapid move up, but then we have this down. And as you can see, this whole movement, this trend is down there, and this is really trending down really hard until it gets to this area. Now, this is another area I want to talk about. It gets down to just 45. Look at these. Look at how price moves down here. We have this turnaround here. Price moves up to here, pulls back. So this is almost like the first double bottom. Pulls up here, double top, goes down here, another double bottom, pulls up here, double top, triple top, down here, triple bottom, quadruple top. Now, once you can see that the movement here is, like you've got these 3 bars that are bearish, 2 bars that are bullish, 2 bars that are bearish. You see, notice how there's really, the movement is pretty dramatic. We're talking about here from this perspective, like 45.12 to, let's say the bottom is 45. So 20 ticks. So we got, let's say, 20 tick moves in this area, 20 tick each way. Let's call it that on this range until we get to here. And once we get to here, let's see, the move was down here. It pulls back, even though it's a doji, moves down, pulls back again, pulls down. Look at this long tail here, longish tail. Pulls back again, another doji, another one. Now, from here, it's not this pattern here. This area, these bars here, doesn't look anything like these ones. You can see these ones slashing up. So this would make one think that once we had this completion of this bar, this would be a place to go short. Off the EMA, at the bottom of this channel, now you've got to, again, if you're shorting from up here in these green areas. But more importantly, how much room do we have? Because the momentum is down. So this is like a continuation pattern. We traded down into this range. Likelihood is that we're going to trade down and out of this range. And that's really what happened, but it didn't last. Because once price got down this area, you see it pulls back. So now it's like really a spiking channel. Here's a narrow channel, pulls down to here, pulls back, moves up, really tests this area, falls off again, pulls back. This is a measured move. Here's a measured move here. It's kind of low, but I mean, this is not quite far. Right down to here. First pullback, fails. Second pullback. You can see this measured move. It's almost right down in this area. So there's like 2 moves. This was really rapid, by the way. This is fast, and this is probably a function of the fact that there was more sellers in the market than buyers at this time, and this is toward the end. But this is pretty late in the day. So I think that when momentum starts heading down like this, you've got to really kind of get on the bandwagon. You kind of hold when things are going down. Don't look at counter trend trading, especially when you go through it. And in particular on a DOE day, the Department of Energy report comes out. So those are the things that I would look for. I mean, I was looking for today as far as the trades are concerned. I have to admit, I wasn't in on a lot of this. I mean, I wasn't looking short. I mean, especially from here. But then again, I kind of caught this trade right here first thing, and by the time I was really kind of got my bearings for this, it was really no place for me to get in. I was pretty happy with this move. I didn't really need much of a move either. I was in on this trade early. It came up. I held my runner through tried to hold it through this stuff, but it came back and took me out. Right when this capitulation here. Had left my stop below at 15 ticks and not moved up to break even +1, I would have been alive for this portion, but it wasn't to be. I only got my first 2 contracts off, and they came back and took me out. But that was fine. Coming back down to this area here, this was a bit of a challenge, particularly around these areas. You have to get in really low, and you have to buy basically. It's almost like a blind purchase. In other words, you have to put your buy limit order down here, or your sell limit up here, and wait for price to come up. So as a result, when this price makes it up here, you put your limit sell or your limit buy order down at these bottoms with your 15 ticks stop below it. And that takes a lot of intestinal fortitude, because you wait for your price to click in, and then you're expecting it to turn the other direction. So when you're buying in, the price is moving against you when you're getting in, or when you're selling, or when you're buying. But this one turned out to be a pretty decent move right here. More of a continuation. I don't know where the top of it started, and I'm saying that there was probably some more sells in here. Any reason to get short, but like I said, I wasn't really looking at this part because I just kind of was sitting on the sidelines most of it. I mean, observing it as it was going, but I wasn't really engaged at this point in time as far as the market was concerned. I mean, you can only realistically, you can only really maintain your. I can only like, speak for myself, but really maintain a high level of concentration. Can't do it for the entire session. It's impossible for me to do that. I have to take a step back, take a bit of a break on occasion. I can focus on for segments, 20 minutes, maybe 25 minutes, like really focus on it. And I don't want to take any trades unless I'm really focused. And so that's, hey, make mistakes, but at the same time, there's just no way I'm not getting involved with that. When I'm not mindful of where I am in the stream of time. I guess that's it. If you have any questions, it's been 21 minutes now. If you have any questions, please let me know. I hope I was clear. If you have any questions, further questions to that, please let me know.